Hello everyone, welcome to first webinar 2025. This is EPSMomentum.com and thank you for joining. What we are going to do today is prepare you for the earnings season. So it's a learning session about earnings season, which is starting now, the first earnings season of the year. So we can use the platform. I don't know if you've ever used the platform, but what my goal today is really to show you what to look for, what to look at in all the thousands of numbers and ratios that are thrown your way from all other financial websites. We have it pretty tight, so we keep it really tight into those 14 applications you see on the top. You can just click on one, open it up, click on another one, open it up, and so on. And I'll go over what's important there. So first off, the model. So what we do at EPS Momentum is we track stocks that are doing well and great. So, and we do that by doing two things. First, we track the earning momentum, and then we track the timing momentum. So really the price movement. So first, the earnings and the fundamentals. So that's very important. If I type like a Microsoft, for example, I can have for every single quarter an earning number, which is -1, -6, -4. That number is between -50 and +50, positive being great, and greater than 20 being absolutely amazing. So if we pull up, these guys are doing a pretty good job right now. Decker's Outdoor. So we can look at the momentum. So I don't know if you see, this is every quarter, you have this little sign. You can hover your mouse so you can see the earning per share at any given point there. The EM is -12, -15, 25, 15, 5, -2, 12, -2, 28, and so on. So really, you would have gotten this stock here at about $41, and it's $201 now. So 3 years later, it almost quintuple in value. So this is how you spot great stocks, great growth stocks that are starting up suddenly. You don't know why, you get negative EM here and then all of a sudden it becomes very positive and greater than 20. So that's very important. That's the first part. The second part is the timing. So the timing is really those three indicators here: the market score, the timing bias, and the timing momentum. Timing momentum is really the moving averages, the distance to high. There's a short-term component, long-term component. So if above 0, good configuration. If below 0, stay away. Same with the yellow. The yellow is the 3-day window of the green here. So same configuration. If above 0, great. If below, then ignore it. And the market score is also the ratio of the stock to the S&P. So it's pretty interesting. All three of them have to be above 0 in order for that flag to be green. And then you get what you want. Now, how do I get all the green stocks? So you click on best stocks here, the button on the top. So I click very quickly, best stocks. And then what you get is CyberArk, Decker's Outdoor, No Kodiak Gas Service, HubSpot. So I can click on HubSpot and I can see they're both green. It's both a great timing. It's both earning 24. Actually, earning has been 20 for quite a while here. It's been a little rocky. But yeah, in 24, 22, 21, 25. So again, great growth stocks. It looks like on this name, it's really the technicals and the price action that drove your decision to invest on that. And interestingly, that's a good way to illustrate how we think about this. See that green line going negative, also the blue line going negative on that date. So they're all going negative here, which keeps you away and you avoid all this downturn. There's a little bit of a positive here, but then you avoid all this downturn and then positive again here. And that's the beginning of maybe a rally, goes up, here protects you on the downturn, and then rally again, little downturn again, and that's it. So that's why it's good to have a great stock, yes, but a good timing as well. So you can have great stock, good timing, great stock, poor timing, or obviously great timing, but a very poor stock, so which you don't want. All right, so this is momentum and price. That's one thing. The second thing is earning per share and sales. So here we're going to click on the matrix here, icon. I'm going to shut off the signal, click on matrix, and here I can see the earning per share is going from 69 to 159, and 218 is the latest value. And then we have 37% growth. This is between 159 and 218. And that's a little bit of a deceleration. I was accelerating the previous quarter, now decelerating. That's why we'll have a little bit of an upswing here. So that was good. But yeah, I mean, a little bit of a deceleration there. Now let's have a look at sales. So click here and you get sales. And on sales, we can see deceleration, pretty much consistent sales, 20%. And so I would say it's a, cruising sales, and the number is getting bigger and bigger, but they're selling more and more, which is truly impressive. So that's really good. So again, sales and acceleration and growth. This is what you want to see. Earning per share, acceleration and growth. This is what you want to see. Third thing, is the revisions. So the revisions are, so I'm going to get rid of these two, but just keep one. Revision score is basically a score that we increment every time there's a positive revision from analyst. So you can see a little bit of an increase here in the last few weeks or month, the last 2 months. It's been down over the last 90 days, but up in 14% since the beginning of the quarter. So this is good. So that means it's ending its cycle of declining revision and going into a positive one, which is very good for the stock. Maybe it will reach new high. It is almost at new high. So that's a good one. Let's have a look at NVIDIA, for example, and you can see the revision on NVIDIA has been tremendous. It's been revised a ton. It hasn't moved a lot. Literally, hasn't moved in more than 6 months. It's still at 132 where it was a while back. But the revision has improved a lot. So, the earning per share, the estimates have been increasing along the way. So that's really, really good. I'm not going into the growth. It's already obviously there. One caveat though, the acceleration here is decelerating, -28 and -49. So that's pretty bad. Yeah, pretty bad stuff. So maybe there's a bit of some trouble ahead for NVIDIA. So how do we take all this knowledge and put it into a screener that will give you names that are worth my time or your time? So it's very easy. We'll go into the screener. We'll click on default here. So we restart fresh. We'll put the name of the company here. And then we can start with an EM. So for example, we want a positive EM, right? Let's say 5, for example, 6. So that gets rid of, we had 5,000 stocks. We're down to 800 now. So that's one thing. The second thing I want to do is I click on the filters here. I will look at the EPS matrix, and I want to look at earning per share change greater than 20% or 15%, let's say 15%. And same thing, I want sales to be positive. Let's be a little bit less stringent, let's say 10%. So 10% in sales and 50% in earning per share change in the last quarter compared to a year ago. Maybe I want the timing momentum to be, let's keep the timing momentum where it is. We start 600 stocks here. And now let's go into the revisions. So on those revisions to be positive. So a couple of things you can do here. You can have a revision over 3 months, revision since the beginning of the quarter. Any definition, you can click on that little I here, which will give you a definition. So the revision score, for example, what we are going to do is the revision score since the beginning of the quarter. So we want that change in value. So obviously we want that change to be positive, adding some positive revisions here. So then I get Innodata, NVIDIA, and so on, Supermicro. So I get the famous names. So that's good. Now I have 365 stocks. So that's interesting. I can also have the revision change in the last 3 months. So I want the trend in revision. I want that revision to, over the last 3 months, to be at least positive, right? So revision trending or momentum in revision. Okay, once I have that, I want acceleration. So acceleration is really important for stocks because this is where you actually make money. It's capturing the acceleration. So this is the number of sequential quarter of positive acceleration in earnings per share for the company. If I click here, I am able to go in the list and say at least 2 quarters of positive acceleration. I can even be more stringent in saying 3 quarters. Notice there's some stocks that been accelerating in earnings per share for 5 quarters or even 7 quarters. KKR, Adama Biologics. So it's pretty impressive. But let's stick to 3. I also want sales to be accelerating. Sequential positive sales acceleration, right? So you can click here, number of sequential quarter positive acceleration sales for the company. So you click here, and then let's say I want at least 2 quarters. All right, now we got 29 names. This starts to be a little tight. Lots of criteria there. So let's look at Sizzle, SEZL, and let's look at this stock. So this stock has been kind of rallying a lot. So from very far, $18 to a lot, to about 223. Amazing rally. Very high earning momentum. So you would have pretty much captured it here at EM30 at $6. Now it's 200. So that's interesting. I didn't miss that one. TradeWeb. Let's have a look at this. TradeWeb, bond trading platform, a software for institution. Really nice uptrend. See, it's interesting. You get positive 19, 18, 10, and then minus 16, minus 4, minus 14, minus 15, minus 10, and then 1, 26, 18, 20. So from here, maybe 1 is the first signal, but 26 is the real signal at 98, right? And so it goes on and on, 4 quarters in a row, and rallies from 95 to 130. So about 30%, 35% up in a year. So it's good. And we can see sales accelerating for 2 quarters. You can see earnings per share accelerating for 3 quarters. So it's pretty nice. The revision is up, and you can see it's up very nicely. So what I can do now as well is prepare for the season, right? So if you go into the description here, you have the ability to look at the last report date or the next report date. So all the stocks that are currently reporting, so have reported, right? So I can look at the stock that reported, let's say 30 days ago, 45 days ago, let's say 35 days ago, right? Well, with all the criteria that I put in, there's none of them. Well, I can say the last 90 days, right? So, or 70 days or 60 days. And now I only have 3 stocks of which Zoom or Elbit System or yeah, let's see Elbit System. Let's see what we got here. ESLT. Look at this stock. EM negative, nothing's happening. All of a sudden it becomes positive and it rallies, right? So this is what I'm talking about here. Like really detecting the good names very quickly. The revision's up. We don't have a lot of analysts. There's actually 1 analyst, so I don't know if it's really or if the sample is enough, but it's kind of a small cap, I would think. So that's good. So this is how you look backward at stock that already reported. But if I want to look forward at stock that will report, next report date, and I can set that next report date to be from now or in the last 5 days all the way to the next 9 days forward, right? So basically 9 days forward from now. I can sort here, and here I have 3 stocks. So TSM, SMBK, and STX. Maybe I'll be less stringent here because let's keep the acceleration to 1. Let's remove that. And let's be a little bit less stringent. So we got a little bit more name and EM1. Okay, we have 4 names. Okay, so Smart Financials, State Street, TSM. All right, so I can click on TSM. I see the acceleration here, and I see everything that's happening. Earnings per share is 50%. Sales is 36%. So this stock is on the tear, at least from, their product on it are selling that cupcake for sure. And the momentum is negative, very negative, and then it becomes 17, 16, and that's it. So very good. The revision is up, but look at this. This is interesting. The revision for TSM is down, right? And we are a few days away from earnings. We're literally 2 days away from earnings. So what does that mean? Like analysts are starting to revised down. So there's a turn of revision, a turn of opinion at Wall Street that from Wall Street analysts on the stock. So this is really not a good. This is really not a good sign. This is saying that potentially it's going to carry on going down, right? So this is something of a concern. So let's see if there's additional indication of potential flow that we could see in the value, in the stock. So one of them is the dollar flow. So the dollar flow is tracking the pressure of money or value being traded in the stock. So when you have those huge spikes here, that means that a ton of money is thrown at the stock to push it higher, and it does. It rises. And then when it goes below the red line, there's no real interest. Then there's a big push here. There are companies that rally, and then plateaus, goes below zero. Here it goes a little bit above zero. So there's a little bit of interest here. So maybe that's a positive. I would take that as a positive. The second thing is the dark short. So the dark short is really a key metric to track institutions. So I'm going to remove the slope here and focus. The blue line is the price, and the yellow line is hedge funds and asset managers entering the name. Now we can see that it's 50% of its volume is traded OTC by hedge funds and asset managers with their market makers that are short against them, right? So that is significant. That means that really institutions are getting into the name, and possibly that could be, behind the scene, they're going into the name, and that could be, useful for what's coming up in the earning day. So the dark short is useful, the dollar flow as well. You can have a look at the option slope as well. I'm not going to go into the slope here. The slope is pretty bearish, so pretty negative. The implied vol is high. Of course, you're 2 days away from earnings, but the slope is pretty average. I mean, it's really, if you put it over 12 months, and let's remove the bands here and just focus on the skew, it's pretty at the mean here. So the calls and puts are pretty much in equilibrium. So there's no real trend there. So, and it's a mixed bag. This one is a tough one. But you can go into every single name. What you would do here is you click on screen, click on save, it's screen 14, and then just save my screen here. And then every day I can run this, and it will tell me all of the stocks that report in the next 3, 4, 5 days or 7 days forward, like 9 days forward, that have extremely high revision, extremely high earning per share in the previous quarter, but good revisions, trending revision upward, acceleration in earning and sales, and that's really what you want to see. So again, lots of tools here. We can spend hours and hours going over all of them. I suggest you give a try to the platform. Play around with it. Sign up for a free trial. There's a full free trial. You can sign up here. We have a 50% off now. 50% off on the annual. You get just only $29. It's pretty much a steal. This is for limited time. We'll change that. So take that offer for the first earnings season while the price is still at a level. And you can try it out for free for 7 days if you like it. You can also attend our webinars and we do live session on a regular basis. You can find our webinars here in the Knowledge Lab, and you click on the Go to Webinars. And you also have a ton of videos on the tutorial button here that goes straight to the YouTube channel and all the videos that we have there. All right, that's a wrap for today. I hope it was useful. Don't forget, earningmomentum.com. Track the earnings, the sales, price, revisions, dark shorts, very important for your earnings season. And during the next few weeks, we'll go over every single name and the ones that are pretty popular and that really made it, and the one that are about to take off to the moon, really. All right, that's it for me. Thank you very much for your time. I hope you find it useful. Let me know if you have questions. You can always email us. Go on EPSmomentum.com and you should be good. Thank you very much for your attention. Bye-bye.